My research focus is the performance evaluation of Indian mutual funds and identifying various factors that play a role in influencing their performance. Mutual funds are investment vehicles that allow retail investors to pool their capital to access diversified portfolios, including stocks, bonds, and commodities. This pooling enables investors with limited investment capital to achieve economies of scale and broaden their investment options. The importance of the mutual fund industry in an emerging economy such as India lies in its potential to facilitate the flow of investor capital into the formal economy, away from traditional asset classes such as gold and bank fixed deposits, thus encouraging greater participation of young Indian investors in equity markets. With multiple fund houses offering numerous mutual fund schemes, coupled with the industry's explosive growth in the past 2 decades, performance assessment of mutual funds is a matter of great significance. My dissertation is one of the most comprehensive studies on this subject, as it covers data over a period of more than 30 years. Employing various performance measures, I find that performance of Indian mutual funds experiences a decline during periods of crisis, such as the 2008 global financial crisis and the 2020 coronavirus pandemic. What's interesting is that the active mutual funds in India outperform passive index funds, which sharply contrasts with the consensus in the global literature. Further, alphas generated by the Indian mutual funds are not attributed to luck, but rather to the skill of fund managers. Further, I find that investor flows are highly sensitive to mutual fund performance. I also established that fund managers in India have significant stock selection skills, but I do not find similar evidence of market timing skills among Indian fund managers. In addition, my research employs a novel dataset of fund level assignments of mutual fund managers and uses the social network technique to examine whether well-connected fund managers perform better. Understanding the importance of connections between fund managers is crucial for understanding the channels through which information flows between fund managers and affects their performance. Connections between mutual fund managers can help them collaborate, receive feedback on ideas and investment strategies, and attract additional arbitrage capital to the securities that they recommend to each other. The findings indicate that the performance of fund managers tends to improve when they have worked with a higher number of colleagues at the same fund and, on average, are closer to the other fund managers in the network. Further, fund-level connections between fund managers positively impact their performance, whereas relationships at the fund house level do not. Finally, in my dissertation, I highlight several research gaps in the literature on Indian mutual funds, which can provide directions for future research in this area. Thank you.